When you start your investing journey, you will lose a lot of money. I'll repeat that statement. When you start your investing journey, you will lose a lot of money. This is true for even big YouTubers who are giving financial advice that even when they started their investment journey, they would have lost a lot of money. Speaking from my own experience of investing in the stock market, when I initially got started, I got started via the mutual fund route. So I used to do SIPs. I used to make bulk investments in mutual funds and I used to lose money, right? I have told this story earlier, but I'm repeating it again that I actually used to lose money when I used to make investments. So today we are going to discuss how not to lose money when you're starting out in the stock markets. This is a complete beginner video and we are going to discuss the concept of small case investing. Now, Smallcase is the knowledge partner for this video. Now, many of you would say that, hey Akshat, you have taken like sponsors and you would of course be saying good stuff about them. So, hear me out. I would only advocate products that I personally use. I have personally invested in Smallcase. I'll show you my investment also. I would only advocate products that I personally like. I would never advertise a product that I do not personally like. Now, some of you might say that, hey Akshat, you know what, very easy for YouTubers to say that. Can you give an example? I dare you. I dare you to give an example of a company that you would not sponsor. Okay, I'll give you two companies that I would not sponsor. Both are billion-dollar unicorns in India. Yes, they have reached out and I will not sponsor them. Guess in the video which companies I'm talking about. And if you like this daring attitude, do give this video a like. That would mean a lot. So, back to small case investing, and I'm going to speak about 4 specific topics today. Number 1, we are going to understand the difference between direct equity investing versus investing in portfolio or bucket or a basket, whatever you call it. Number 2, we are going to take a look at what bucket or portfolio options do you have as a retail investor. So these are mutual funds right now and small cases. Number 3, we are going to understand, then this is very, very important. We are going to understand the difference between small case investing and mutual fund investing. What are the advantages, disadvantages, and I will back everything up with numbers and give you specific concrete examples. 4th, I will help you understand how to start investing in small cases. So let's get this video started. So point number 1, we need to understand the difference between equity versus basket or portfolio investments, right? So equity investment is super simple, that you have, let's say, any stock, right? So you have HUL stock, right? Or you have TCS stock, right? So you are literally going to your trading portal, you have a Zerodha account or you have some other company's account, you just literally go there, you literally click on HUL and you buy that stock. That is called as direct equity investments, right? So you as a beginner can do equity investments, no harm there. That's your option 1. Your option 2 is that you can undertake something called as basket investment. So let us quickly understand what basket investments are. So this essentially means that let's say that you are buying more than one stock, right? So there are 3 stocks in this basket, or let's say 2 stocks in a particular basket, right? And you're going and buying those 2 stocks. So this could be, for example, HUL, TCS, right? Infosys. So you have this basket and you're going and buying this basket. So this is called as basket investment, right? So far with me? Now, so what are the primary advantages and disadvantages of equity investing? Let me very quickly cover that. I have made a separate video. I will link it here, which states how do you invest your 1 lakh in direct equities. I have shown the entire method. Please go and watch it. But I will very quickly recap some of the salient points from that video. So when you are investing in equity, the first problem is that you have to do a lot of research, right? You cannot just simply go and buy equities randomly, right? Because even if you buy a really good stock, for example, if you're buying HUL today, so today HUL is trading at a very high price. So if you buy a very good share also at a very high price, you might not make a lot of returns. In fact, in some occasions, the stock would hardly ever move. Let me show that to you via an example. So you can see that, hey, here we are talking about a good company called as Reliance, right? So Reliance is one of the biggest companies in India. And look at, like, from approximately 2008 to the period of 2016, stock hardly ever moved, right? So it was trading at approximately 500 until 2016. It was trading at 500. So if you would have bought Reliance in 2008, 2009, approximately 2009, you would have hardly made any returns, right? So this is the risk of making direct equity investments, that you do not know, number 1, which stocks to buy, at what price to buy, at what price to sell. This becomes a risky proposition and it requires you to undertake research and skill and hone your financial acumen, right? Therefore, I advocate learning about the stock markets, but If you're starting today and you say that, hey Akshat, you know what, I want to invest in the stock market, should I directly do it? It is risky, because there will be a learning curve for you that you will invest money in the stock market, you will lose some money, you will have to go back, you will have to reinvest it. This brings me to a very important second point regarding equity investments or stock market investments in general. If you want to make money in the stock markets, then you have to stay in the stock market, right? Many investors, what happens to them is that they pour a lot of money in the stock market and direct equities, they lose a lot of money, right? So let's say that you have 50 lakh rupees, you go and invest that in the stock market, then if you lose it, right? If you lose 25 lakhs, then you would never come back to the stock market, right? So the first rule of winning in the stock market, that you have to stay in the stock market long enough. If you like this step, please hit the like button. Moving on, just to conclude, direct equity investment is research oriented. You need to know, you need to learn, and it will take you a little bit of time to learn about stock markets, right? So I always advocate learning about stock market. Continue to do it. But meanwhile, don't just sit right now, because we are in the bull run and you must invest. I have made a separate video on what bull run is. I will link it somewhere here. Please go and watch it. You will understand why this is a good time to invest. I have used Ray Dalio's principle to make my case. So if you're a complete beginner, just do not sit. Figure out options on how you can get started in the stock market. You do not need to buy equities directly. What you can do is, and this brings us to part 2 of this video, what you can do is that you can start investing in portfolio/basket investments. So I'll very quickly cover what are basket investments. These are collection of stocks. So you have 3-4 stocks in that basket and you're buying a part of that basket or that entire basket, right? So essentially you have 2 options here, right? So your option 1 is mutual funds, right? So mutual funds. I have bad handwriting, sorry about that. So our first option is mutual funds. Now mutual funds are good options. There are wide variety of mutual funds, but mutual fund industry has gotten so complicated that it requires another set of research just to figure out which mutual fund you should be investing in, right? I have made a separate video on mutual fund. I'll link it here. Please go and watch it. That will tell you the ins and outs of mutual funds. But very quickly, just to tell you what mutual funds are. So in mutual funds are a collection of stocks. In this basket, there are ton of stocks. Now this mutual fund will have an NAV, right? For example, if you're buying ITC stock and if it is trading at 210, that is the buying and selling price of that stock. But in mutual funds, these are collection of stocks. They have like more than 2 stocks. So what they say is that, hey, there is an NAV, net asset value, of this particular basket, and you can buy a part of this basket. This is called as unit investing. So unit investing means that when you are investing in a mutual fund, you are buying a part of that basket. You are not owning any shares, right? You are owning a part of that basket of shares, right? This is a very important point. So you need to understand what NAV is, what unit investing is. These are what mutual funds are. Mutual funds are usually segregated. I'm using the word usually segregated into large cap, right? Large cap, small cap, mid cap, right? They are also segregated as debt versus equity mutual funds, right? So these are broad categorizations. Debt means that you are buying bonds. Equity means that you are buying equities, right? Large cap, small cap, mid cap means that there is a certain size of the company, right? Which the mutual fund indicates and invests in. So this is how mutual funds are usually categorized. Now, your second option is small case, right? I think that small case is a very smart way of investing. Now, in small case, what happens is, now small case again is a basket or portfolio of stocks, right? But here what is happening is that you are owning stocks, right? Owning stocks. You are not doing unit investing, right? You are actually owning a basket, right? So let me show this to you. So for example, if you go to any small case and if you see that, hey, let me take a look at quality smart beta. And if I look at what is the price of this, that I need to have a minimum investment amount of 63,000, right? Why? Because I'm looking at the stock weights. Now, some of these stocks might be very expensive. For example, if you take a look at HUL, now Hindustan Unilever is usually trades around 23,000-2400 levels. So this is an expensive stock, right? But if you were to invest via mutual fund, you can even invest 500 rupees in a mutual fund. But here, if you're buying this particular small case, you will at least own one stock of Hindustan Unilever, which will cost 23,000-2400 rupees, right? This particular small case costs 63,000 rupees. Now you'll say that, you know what, Akshat, this is like super expensive, I can't afford it. No, there are a bunch of good small cases where the investment amount will be low, right? So don't worry about that. I will talk more about it in section 3. But the important point to note about small cases is that these are theme-based investments. For example, if you want to invest in rural India, right? You are feeling that, you know what, Rural India will grow magnificently because now there is work from home. People will migrate from big cities to smaller cities and towns. So rural India will display a lot of growth. So now if you want to invest in rural India based small cases, you can go and invest in this theme of small case, which is called as rising rural demand. So you can go and invest, and it costs 38,000. So every small case is designed by a different manager. It has a different theme. So you can do thematic investments in small case. Now this is the primary benefit of small cases. So if you're interested in investing in, let's say, rural India, or if you're interested in investing EV stocks, then you can go and buy this theme of small cases. That is one of the key salient points about small cases. So if you're investing in these portfolio or basket investments like small cases or mutual funds, you don't need to do heavy lifting the way you would have to do when you are investing directly in stocks, right? So therefore investing becomes simpler. Now your obvious question would be that, hey Akshat, are mutual funds better or small cases better? Which one would you recommend? Now let me give you all the options, and I would want you to make the decision here, but let me present all the facts and figures. So this brings us to the part 3 of this video, where we will discuss the differences, advantages, disadvantages of mutual funds versus small cases. Now the first major difference between small cases and mutual fund is the level of transparency, right? When you invest in a mutual fund, it is very difficult for you to track where your money is going. You would essentially do SIP. That SIP goes into directly XYZ mutual fund, and that mutual fund manager makes the decision of selling and buying the stock at his or her own discretion, right? You are giving your money to a mutual fund manager, and that mutual fund manager makes decision on behalf of you, right? To sell and buy whichever stocks that he or she feels like buying or selling. Now, this can be very, very intimidating, especially for people who want to know where their money is going. Now, I'm not saying that you can't track your investments. Of course you can, but the tracking process is very, very difficult. It's inconvenient, and majority of us, including me, when I make investments in mutual fund, I do not track where my mutual fund money is going. So, this can be very, very intimidating for a lot of people. It gives you very less control. This is a huge advantage in small case because you know exactly where your money is going. So let me show this to you. So this is a small case that I had purchased. It's running at 47% return, right? So yeah, this is running at 47% return. So I'm a genuine investor in small case because I made this investment a few months ago. So now I can track this particular small case in which I have invested. So I had invested in low risk smart beta. And if I have to check, hey, now which stocks do I own through this small case? So I can take a look at all these specific stocks that I'm owning through this small case, right? So this is the wonderful part of small cases, that you would know exactly where your money is going. Now if I do not like a particular stock from my portfolio, I can go and sell it. So it gives me a lot of transparency and control. This is one of the most useful things that I find about small cases. This is one. The second difference between mutual funds and small cases is that there is no lock-in period for small cases, right? So what happens is that when you go and buy and invest in a mutual fund, there is a certain lock-in period for majority of the mutual funds, right? That you have to go and hold your money for at least 1 year, right? If you withdraw the money, there is penalty, all that stuff, right? In small cases, that is not the case. That's one. Now part B here is that you get control over your dividends when you're investing via small cases. Some companies, for example, ITC, they pay like 5 to 7% dividend every year, right? That directly hits your bank account if you're holding ITC in your stock portfolio. For example, in my case, in this small case that I was showing you earlier, you can see that I have ITC. I have ITC here. Now, if I'm holding ITC and if ITC gives me, let's say 7% dividend, that entire amount is going to hit my bank account if I've invested via small cases. But if I've invested via mutual funds, that dividend gets reinvested in the mutual fund itself. So you don't see that cash flow happening, right? This is a very important point to remember, that you get complete control over your dividends and there is no lock-in period when you're investing via small cases. Number 3, let us discuss a little bit about the commissions, right? Because this is the most important part and this is the least covered part about small cases and mutual fund investments. So let me cover mutual funds first, right? Now, if you are making your investments in active mutual funds. Now, what are active mutual funds? Please go and check my video on mutual fund. You will understand more. But usually, majority of us or majority of retail investors, we invest in actively managed mutual funds where a mutual fund manager is actively trading stocks on your behalf. So, actively managed mutual funds have an expense ratio of 1 to 2%, which is very, very high, right? So, this is a major pain point. On top of that, there is entry and exit load, right? So all these things are there, right? So if you mix all this, the total commissions that are charged by mutual funds comes out to be quite high. Now, if we extend this discussion to small cases, now this gets a little complex here, right? And I'm being transparent with you because small cases are designed by certain managers, right? And companies, right? They put their small cases on small case dashboard. For example, if I want to create my own small case and sell it to all of you, I can do it, right? I can do it. I can create my own small case and I can say that, hey, these are the stocks that I'm investing in, and I would continue to rebalance it over the next 3 years. And this is the rate that I would charge. So I am setting those rates. What you need to understand about small cases is that small cases is designed by someone at the back end and they decide the commissions on that, right? So it can really range. It can range from 0 to 3%, right? So it really depends. For example, there are small cases that are designed by Windmill Capital, right? Windmill Capital is the in-house research team of the company called as Smallcase. There, the commissions charged are 0%, right? There are transaction cost of 100 rupees plus other charges like securities, transaction tax and all. This is also charged on any equity that you're buying. So these are not charges that can be attributed exclusively to small cases. But the point that I'm trying to make here is that the commissions charged by small case can range from 0 to 3%. And it really depends on the manager who has built that small case. If you want me to build a small case, do let me know in the comments. I will try to do that. And please hit the like button. That would mean a lot to me. Now, commissions are also decided by your broker because you're buying this small case or investing in equities via small case through your broker. Right? I'll break down that statement. So essentially you're buying the basket of stocks via small cases, right? So they have created a basket. But in order to do that, you need to have a broker first. You need to have a demat account with Zerodha, Upstocks, Grow, etc., etc. So you need to have a trading account. So your broker also decides the commission. So in total, commissions vary on small cases. So please be mindful about that. And you can read more about the commissions exclusive to the specific small case that you're buying. For example, this particular low risk smart beta is created by Windmill Capital, right? So this is the in-house research team of small cases. They are going to charge very low to no commissions. So please do your due diligence on commissions bit. So I prefer investing via small cases because it gives me a lot more control. I can pick and choose which stocks to sell when, add and remove certain stocks. It gives me more control, transparency, and I invest in small cases where commissions charged are low. So therefore, I like small cases more. So now this brings us to the final section of this video, that how do you start small case investing? First and foremost, you need to have a brokerage account or a demat account, right? Now you can open this through Zerodha. So I personally use Zerodha. So you can find the link in the description box in case you want to open your account. That's one, right? So you can have Zerodha. You can use other platforms like Upstocks, etc., right? So you need to have a demat account first. It's super easy to open your Zerodha or Upstocks. I don't know about Upstocks because I have not opened it, but it's super easy to open Zerodha. You can literally do it from your home. You don't even need to step outside your house to get your Zerodha account opened, right? So open your Zerodha or Upstocks or any other account that you want, right? Have a demat account. That's step one. Then you need to link it to your small case. They already have partnership with Zerodha, Upstocks and bunch of other brokers. So I will just use my login password to log into my Zerodha account. So I have logged in, right? And then this dashboard comes up. Now what you need to do is that you need to go to the Discover tab, right? And then you can filter ideas by themes, which themes you are interested in. So for example, a few days ago, I made a case study on EVs, that I'm very bullish on the electric vehicle sector, right? Electric mobility sector. So I will go and look at that small case that, hey, can I invest in EV stocks? So I can, right? So this is the total amount. Now I can take a look at stocks and weights, right? So these are some of the stocks that are there in this EV segment. All looks good. So Amaraja battery is very good. I'm already an investor. Exide, bunch of other things, right? So you can pick and choose and you can decide to make an investment on this small case. If you press invest now, your money will get invested. Now let me very quickly talk about the rebalancing that happens in small cases. So for example, you see this notification tab, right? So I have already purchased a small case earlier and they have given me a notification that, hey, there is a pending rebalance. So I just need to go there and see that, hey, what needs to be rebalanced. So I will see the update here, right? And I can review the updates. So you can see that stocks you are buying. So I'll have to buy these 9 stocks and sell these 9 stocks for my portfolio to be rebalanced. Now, who made this decision of adding these 9 stocks and selling these 9 stocks? The backend research team at Smallcase. or the person who manages this particular small case. So he or she would have made this decision that, hey, now is a good time to add these 9 new stocks and sell these old 9 stocks. Why am I not rebalancing? Because I wanted to show this to you that this is how easy it is to rebalance on small case. So I hope you enjoyed this video. Please check the description box. Please go and explore new small cases. That will teach you a lot. That will teach you a lot about analyzing different stocks. How is portfolio being created? At least go and explore it. If you like something, definitely make investments. If you want, the next video that I can do is that what are top 3 or 4 small cases that I am going to invest in. If you want me to make that video, please comment. I'll definitely do that. Thank you so much, and I'll see you the next time.